This video is based on supply-side policy, and we're looking at one specific policy, which is privatisation. So, privatisation is when the government transfers state assets to the private sector. So, it's often done for two reasons. One, as a method to acquire government revenue, and the second, because the government does not believe they can continue to operate this asset effectively. So, the Conservative Party have been strong advocates of privatisation, and between 1979 and 1981, Margaret Thatcher's cabinet encouraged the policy of breaking up the public sector. So, British Aerospace and Cable and Wireless were the initial examples of this policy, with some of it sold. Amid the 80s recession, Tory MP Geoffrey Howe argued that privatisation would make large utility companies more efficient and productive. And in this period, the government sold off Jaguar, British Telecom, the remainder of British Aerospace and Cable and Wireless. They were completely sold off. So following the Tory third election, and between 1987 and 1991, they rolled out a much more aggressive programme of privatisation. So British Steel, British Petroleum, British Airways, Water and Electricity were for sale. And these privatisations provoked serious opposition. Now, between 1992 and 1996, the government proceeded with the sale or the sell-off of British Coal, as well as Powergen and National Power, as well as British Rail. And finally, after the bailout of Northern Rock, after the financial crisis, when the Tories took office, they continued with the policy and they sold off Northern Rock as well as other banks that were nationalised after it was saved. The Royal Mail was then sold off, which was again seen as controversial, with even Margaret Thatcher once saying the Queen's head would never be sold. Now, I'm just gonna quickly show you a video based on the Royal Mail, and it's an interview with Vince Cable, who worked within the coalition on it. Obviously, he was a Liberal Democrats MP, but he was working with the Conservatives in that coalition, and he claimed it had to happen for the good of the Royal Mail.
You get an enormous amount of froth and speculation in the aftermath of a big IPO of this kind. It is of absolutely no significance whatever. I mean, what matters is where the price eventually settles. And if we look back at this in 3 months, 6 months' time, or indeed years to come, that's what we're really interested in. I mean, the bulk of the shares have gone to long-term institutional investors, stable investors, basically some overseas investors, but mainly British pension funds and insurance companies who are there for the long term. That's where the bulk of it's gone. With some,
they haven't even got the shares yet. They're trading in them, aren't they?
Well, indeed, the acceptances were made yesterday, and the flotation occurs today. But that is the way in which it will proceed.
Can you give us a little more about who is getting these shares? You've said that it's long-term shareholders. Of the institutions who applied for them, I mean, most, in fact, institutions were turned down, as I understand it.
Yes, well, that's because they've been very heavily oversubscribed. And the objective of the exercise, which fits in with what we want for the Royal Mail, is to make sure that it has stable, long-term investors.
So you literally went through the applications one by one and said, is this a good shareholder or a bad shareholder? Is this a hedge fund? We don't want them to have it there as business.
No, this was not political. I mean, we have a professional team and we have professional advice, and they're the people who make decisions, and I don't interfere with it. Well, the one thing I was determined to ensure was that we should have good, committed, long-term investors. Now, I say that for the most part, these are pension funds and insurance companies who are managing the money of millions of British people. And from the point of view of the Royal Mail, we're interested in helping this institution to survive and compete in a very difficult market. They've lost a lot of their business because of email. They've got to raise a lot of private capital in order to invest. They can only do this from private markets. They can't get the money from the government. And so that's why we've had to do this privatisation.
It's to protect the fact that whether you could borrow money privately.
Well, it is very clear. We looked at all the alternatives, and indeed a man called Richard Hooper did a report for us. He'd done one for the Labour government and came to the conclusion that there were no other ways of doing this. If there were, we would certainly have looked at them.
Right, so where we go from now, though, is that you think the price will go down, in fact. You think the price will settle down. So people who put in £750 worth, it's worth 1,000 this morning, don't spend that because it's basically probably going to settle somewhere closer to the 750.
Well, I'm not in the business of giving people financial advice. I mean, unfortunately, my Labour predecessor has been around doing that, telling people it's underpriced and therefore should go out and buy it. I mean, he may find himself in the middle of a mis-selling scandal in a few months' time. I'm not doing that. People have made their own judgments. And what I'm very pleased about is of the 700,000 people who applied, we've been able to give the 750 shares to almost all of them. The only people who haven't are the very, very big wealthy investors who wanted more than 10,000, and we've said to them, well, we're having to ration the allocation. You wanted a big chunk. We can't give it to you, and we followed the pattern in previous privatisations and IPOs and declined their offer.
There's a very political aspect to these things, isn't there? It's a matter of great joy to Conservative governments that they have these things. There's a lot of fuss and attention goes over them. Everybody gets excited and sends in their coupons. It doesn't have to be done that way. You could actually privatise something by selling 20% of the stock, and then there's a market in the shares. You see what the price is, and then when you subsequently sell the shares, you don't have this frothy kind of underselling, the people making quick gains. You could do it in a completely different way that would perhaps generate less excitement, but would be a more rational process.
Well, we are selling it in chunks anyway. The government's retaining a large share, 30%.
You sold over half.
But the argument against doing it in lots of small bid is, of course, that there is a big cost associated with the flotation. I mean, all the prospectuses and the underwriting fees and so on, and we don't want to keep repeating that. You did say that Conservative governments get pleasure out of this. Actually, I'm not a Conservative.
Indeed.
And I advocated this the best part of 10 years ago. And one of the first things the government did, and which I did when I came into office, was prepare the ground for the legislation which is now resulting in this action. And I did that as a Liberal Democrat. The particular contribution I and my Lib Dem colleagues made was to ensure we had a large worker shareholding. And people have rather forgotten about that. The
10%.
The Royal Mail workers will get 10% of the shares. They're probably worth now around 2,000 each, and it's locking them in. Their future is tied in very much with the success of these shares.
Except they're probably going to vote for a strike next week. One of the things Billy Hayes said was it's not going to make a scintilla of difference to their attitude towards this privatisation, which they were very against, and they are scared and worried about conditions and pay, and they will go on strike.
Well, that's their choice. We've maintained a dialogue with them. I and my colleague Michael Fallon have regularly talked to Billy Hayes and his people, and we tried to persuade them. They're not persuaded, but nonetheless, I think they will acknowledge in future that we've got the best future for the Royal Mail. It's giving it a future. It will now be able to compete. They have shares which are quite valuable. In fact, only a handful, I think just over 100, 150 or something of that order, out of 150,000 have actually declined to take these shares, which suggests that they regard them as valuable. I think overall this is a very good deal for them, for the country, for the government. We get value for money. And I think that judgment will be borne out in time.
As sort of popular capitalism returns to our front pages, we have passed a rather interesting milestone in this country.
Considering Vince Cable's interview on the Royal Mail, he believed that it would help it to survive and compete. He believed it wasn't just a way of generating government revenue within the austerity policy, but a way of actually boosting productivity. And when we consider it to be a supply-side policy, it must enable greater capacity growth within the economy. By allowing it to join the stock market, it can acquire greater funds for further expansion. And this could be even based on expenditure on R&D, on capital, and this could drive dynamic efficiency within, with their greater ability to achieve supernormal profits. So when considering how, we're going to look at these three factors. So number one, improved and increased efficiency. The main argument for privatisation is that private companies have a profit incentive to cut costs and be much more efficient. If you work for a government-run industry, managers do not usually share in any profits. However, a private firm is interested in making a profit and so is more likely to cut costs and be efficient. So since privatisation, companies such as BT and British Airways have shown a degree of improved efficiency and higher profitability. You could argue that when it's in government's hands, they haven't got that pressure, and this kind of relates to point 3, which is shareholder pressure. They haven't got as much pressure to try and be as productive as they possibly can. So number 2, increased competition. Often privatisation of state-owned monopolies occurs alongside deregulation. So in other words, policies to allow more firms to enter the industry and increase the competitiveness of the market. It is this increase in competition that can be the greatest spur to improvements in efficiency. So again, it links back to number one. For example, there is now much more competition in telecoms and distribution of gas and electricity than when it was a state asset. And finally, shareholder pressure. So it's argued that a private firm has pressure from shareholders to perform efficiently. If the firm is inefficient, then the firm could be subject to a takeover. A state-owned firm doesn't have this pressure, and so it's easier for them to be inefficient. Also, because you may get shareholders with short-term goals, profit is absolutely crucial. So again, it links back to point one. And even in the long run, what you might find is that they want that growth. They want that business to grow and get bigger and bigger. And therefore, they will allow for much more investment. And when you think about government, a government might be a little bit short-sighted. They might not want to spend on infrastructure, for example, because that would be a massive expense. And if it was coming, for example, to an election, or if their budget was being doubted, so for example a deficit was growing, they might not want to publicly say that they're going to invest in that infrastructure because of the cost to the taxpayer. But when it goes to the private sector, these shareholders and these investors might see the long run potential of that. However, as mentioned before, it is a controversial policy. The Tories' biggest opposition, Labour, have often disagreed and fought to prevent, avoid or prolong such a method. So in the last election, Jeremy Corbyn's key points was to help stop any such moves as to privatise the NHS, which was denied by Boris Johnson. However, accusations were made that under Cameron, plans had already been drawn up and it had already started by the sale of smaller assets within the NHS. There is the belief that certain public assets should never be made public in terms of the private sector because they're deemed too important to allow a profit motive such as the NHS. There's also another argument that if it's a natural monopoly, then by transferring it to the private sector, it simply becomes a private sector monopoly. So this would require great regulation from the government to avoid any exploitation of the market. And if the government wasn't to regulate it, it would simply cause allocative inefficiency, as the firm is likely to increase the selling price and limit the quantity sold. And why? Because they've got no competitors. Because, again, their motive now is to generate profits, and with no competition, they can pretty much do whatever they want without regulation. Another negative consequence is what has been experienced by the Royal Mail. So when it was privatised, due to the desire for profit from the very beginning, it led to rationalisation. So there was announced plans to try and break it up. Parcelforce, for example, is going to be separated into another company, and this may result in 20,000 job losses. These types of decisions are causing industrial action, which has already taken place when workers went on strike regarding pay, pension reforms and weekly hour reductions from 39 to 35 hours. So again, privatisation is often met with I suppose a lot of anger from their employees because their employees straight away I suppose assume that redundancy is going to follow.